Money.
You might think that getting into the IT field is impossible without a computer science degree, but Tech Coach Ralph is here to prove you wrong. Get ready for some jaw-dropping revelations on how to break into this lucrative industry. Listen up, tech enthusiasts! Are you ready to break through into the IT field, but feel like you need a computer science degree to make it happen? Think again! Tech Coach Ralph has some exclusive, mind-blowing secrets to share with you. Get ready to be blown away by his jaw-dropping revelations on how to break into the tech industry without a computer science degree. So get your notepad ready, because Tech Coach Ralph is going to change your life forever. Buckle up, because you're about to embark on a journey to success in the IT field.
Let's get it.
Good morning, good morning, good morning. Today is Saturday, September 7th, 2024. How is everyone doing today? I hope you are having an amazing morning, and I hope you had a great week. We just finished the first week of September, so clap it up for that. And I'll tell you this, right? Mitch had me feeling some kind of way the other day. So I put on my glasses on. I put on my glasses. So here we are. See, I have my glasses on, looking all sophisticated and stuff, right? You know, we're going to be talking about jobs and money and all that type of stuff. So I'm like, you know what? The glasses have to come on today. All right. So let's get to work. Today, we're going to be looking at our weekly economic numbers. We're going to go through the different topics. I'm going to cut out the initial jobless claims report because we have some other job reports. And then we're going to be looking at, let me see, we have to look at something that your car sent me about wait, that's not the link. Hold on one second. Oh, safest cities to look in. So we have the one for safest cities to live in. We're going to look into that, and then we're going to talk about, and then I want to take a look at what are tariffs and what are unrealized capital gains, and then we'll wrap it up with that. All right. So with that being said, just wanted to say a big welcome to everyone who's in the building. So welcome into your car. Happy to have you here. Mitch, I know you're coming soon. And Roxy, of course, always Roxy. Shout out to you all. I appreciate you all.
I appreciate you.
Right? The King Tech Pookie himself says the Tech Pookies are in the building. So let's get to it. Let me take care of this thing real quick. Let's go with that. And let's go. Cool. Perfect. All right. So let's get into the numbers that we're going to be reviewing for this week. All right. So let's go to our document over here. Still recovering from all that craziness that happened on Thursday, but things are getting better. So we're going to be looking at our LinkedIn document. Then we're going to be looking at Bloomberg. But overall, like I said, we're going to take a quick look at the Purchasing Manager Index, and then we're going to be looking at the JOLTS, from the Bureau of Labor Statistics, and the Institute for Supply Management. All right, so let's take a quick look at this real quick. And let's see here. We got Spaces in the building. Good morning, Spaces. Oh, by the way, I have put the link. Let me turn on the link. If anybody wants to call in, talk about anything, so the link is pinned to the top of the chat, and I just turned on the ability to call in. So if anybody wants to call in, feel free. Space says, do you wash your greens in the bathtub too? See, I don't even make green spaces. But we did have that poll last week, and some people said they do. Some people said they do wash it in the bathtub because it is just too dirty to wash in the sink. So So I made a declaration that I will never ever eat greens again. And Roxy says, "Good morning, good morning to you as well, Roxy. Hope hope you had an amazing week. All right, hope you had an amazing week. All right, so the number. Let's take a quick look at this. It says the U.S. labor market is expected. So this is from Monday, right? It says the U.S. labor market is expected to take center stage this week with attention focused on hiring in August. The Bureau of Labor Statistics on Friday released numbers on non-farm payrolls added along with unemployment rate. The rate rose for the fourth straight month in July. As new payrolls declined, these signs of a softening job market are have prompted Federal Reserve Chair Jerome Powell to say the bank has shifted support away from price stability to towards full employment, stoking expectations for a interest rate cut in September and speculations about how deep it might be. Right. So this is stuff I'm going to review. We already spoke about it. So let's get to it. So I'm going to pull up the Bloomberg calendar as well. I like to use the Bloomberg calendar as well because there's a lot of other economic data that comes out, but not all of it is actually relevant to us. So yeah, whatever. Bloomberg. I mean, they're bad designing skills. You would think, right? Bloomberg would have a good product on this, but sometimes you can only be so hopeful. So let's go US. Let's go for employment. Not confidence index, but let's go to inflation here. Let's go with that. Let's go to this one, apply. So we have our manufacturing PMI. We have our JOLTS. And we have, so we're not going to do initial jobless claims. We have the non-manufacturing PMI. And we have the unemployment rate and non-farm payroll. So we'll take a quick look at those. All right. So let's get started. We have my dear friend in the chat. We have Alexis. Good morning to you, Alexis. I hope you are having an amazing Saturday morning. I hope you had an amazing week. All right. Shout out to Alexis as always.
I appreciate you.
All right. So let's get to it. Let's start off with, what we're going to start off with is the Purchasing Manager Index from the Institute of Supply Management. Let's do a quick look. So by the way, if you guys saw on this past Thursday, we started building out our Urban Dictionary of Economic Data so that we don't have to use this. Hopefully in the next few weeks, we won't have to use this document anymore. We can already started mapping out the API and stuff like that and the database for it, but hopefully we won't have to use this anymore, this old thing, and we can be a little bit more modern. Because see, this document right here is just what the regular Pookies are going to use, but the tech Pookies, they need to have a web-based application where they can just type in weekly jobless claims and it gives us this definition and stuff like that. So, we're modernizing. We're modernizing over here, right? So, with that being said, we need to know the Purchasing Manager. So, what's the Purchasing Manager Index? Really quick, right? So, the PMI, Purchasing Manager Index, is like a report card for the economy. Imagine you have a friend who checks how well stores and factories are doing each month. They ask questions like, are you making more or fewer things this month? Are prices going up or down? Based on the answer, they give you a score from 0 to 100. If the score is above 50, it means the economy is growing, like getting a good grade. If the score is below 50, it means the economy might be slowing down, like getting a lower grade. So the PMI helps understand if the economy is doing well or not. All right, so that's what we're going to be looking at. Let's get to it. So the manufacturing PMI, it's at 47.2. So if the score is above 50, that means it would be doing better. If it's lower than 50, that means it's not so well. So for August 2024, 47.2. 2.2. So let's take a quick look at what they have to say. Right. So this is from Tempe, Arizona. And it says economic activity in the manufacturing sector contracted in August for the 5th consecutive month and the 21st time in the last 22 months. Well, where are all the manufacturing jobs going? Let's find out. So the manufacturing PMI registered 47.2% in August, up 0.4% points from the 46.8% in July. Well, let's clap it. At least we can at least celebrate that. The overall economy continued in expansion for the 52nd month after 1 month of a contraction in April 2020. A manufacturing PMI above 42.5% over a period of time generally indicates an expansion of the overall economy. The new orders index remained in contraction territory, registering 44.6%, 2.8% points lower than the 47.4% recorded in July. The August reading of the production index, 44.8%, is 1.1% points lower than July's figure of 45.9%. The prices index registered 54%, up 1.4% points compared to the reading of 52.9% in July. The backlog of orders index registered 43.6 points, up 1.9% points compared to 41.7 in July. The employment index registered 46%, up 2.6% points from the July figure of 43.4. And your card says all the manufacturing jobs are going to India. That is quite possible. That is quite possible. Let's see. The supplier deliveries index indicated slower deliveries, registering 50.5%, 2.1% points lower than the 52.6% recorded in July. Let's see. The new export orders index reading of 48.6% is 0.4% points lower than the 49% registered in July. The imports index remained in contraction territory in August, registering at 49.6, 1% point higher than the 48.6% reported in July. Let me see. Anything else? So let's go to I like to read. All right, so let's read this right quick, and then we're going to see what people are saying. All right. So it says the 5 manufacturing industries reporting growth in August are primary metals, petroleum and coal products, furniture and related products, food, beverage, and tobacco products, and computer and electronic products. Quick question. Would you invest in tobacco products? Not saying that you're going to smoke cigarettes or anything like that. The question is, would you invest in tobacco? Think about it. Would you invest in tobacco? All right. So, let's go to the 12 industries reporting contraction in August. In the following orders are textile mills, printing and related support activities, non-metallic mineral products, plastics and rubber products, electric equipment and appliances and components, fabricated metals, transportation equipment, wood products, machinery, paper products, chemical products, and miscellaneous manufacturing. Let's see. And Mitch, good morning. Good morning to you, Mitch. And good morning, your car. Good morning, Mitch. How are you guys doing today? The co-host of the show. And Mitch says, nope, he is not investing in tobacco. Why not, Mitch? Why would you tell us why would you not invest in tobacco products? I'm just curious. Your reasoning on why you wouldn't do it. And we'll see. Alexa says cigars. Are you saying you would invest in cigars, or are you just equating that to being a tobacco product? Just curious. And are you saying, yeah, would you invest in cigars, or are you just saying that's also a tobacco product? Just curious. Let me see. And Mitch says, because he is not investing in anything that he does not do. Interesting. That's okay. Let's see. Curious to see if there's any other thoughts as well. Your car, would you invest in tobacco? Roxy, would you invest in tobacco? Just curious. All right. So it says, let's take what the respondents to the index survey are saying. A noticeable slowdown in business activity, staffing and production rationalization has been triggered. Previous optimism about future growth has been dashed. It says backlog has dropped in half as invoicing remaining strong, but orders have slowed significantly. Hoping to see orders pick back up pick back up for the fourth quarter and into 2025, but expect third quarter to remain slow for incoming orders. That's from the transportation equipment. After a slow start and low year-over-year sales volumes during the first half of the year, we are now seeing a mild increase in year-over-year sales volume, along with more steady growth. That's from food, beverage, and tobacco products. Business outlooks look good. Recovery from the electronic slowdown is strong for the second half of the year. That's for computer and electronic products. Let's see. Anything else that stands out? Let's see. Let's take a look at some other industries. Let's take a look at this one. New orders continue to be strong and inventory are slightly down as a result. Supplier lead time seems to be creeping back up in certain categories. That's for miscellaneous manufacturing. Let's see. Let's go to the wood products. High interest rates are curtailing consumer spending on large discretionary spending for furniture's cabinetry, flooring and decorative trim, which has affected our industry sales potential. At the same time, pent-up demand seems to be growing for housing and remodeling. Interest rate cuts may not happen soon enough to have an impact this year. So that's what people are saying for the producer price let me see, for the purchasing manager index, right? So this is for the purchasing manager index, right? So we're gonna get into the JOLTS, the job openings and labor turnover, but let's check out the chat real quick to see what we have going on over there. Let's see. So yeah, Mitch said he's not investing in anything that he doesn't do. And Roxy said she would invest in tobacco. Why would you invest in tobacco products, Roxy? I'm just curious, right? And Mitch is that Yakar is a smoker, so of course he would. What? Let's see. It says no, it's a seasonal commodity. They moved most of the growing to South America. Interesting. Well, I don't even know. Like, is Marlboro still around? I don't know. Newport maybe. Would you even if they are growing it in South America, would like if it's a US based company, would the stock like go up or down? I don't know. I'm just curious, but your card said he would not do it. He would not invest in tobacco. Alexis says that she is interested in a cigar business right now. Okay, interesting. It says we didn't ask you for a logical answer, chump. And Roxy says because a lot of people smoke. Interesting. Says a lot of people speed too. That is not the same. That was straight trash.
Congratulations, you played yourself.
I mean, so the reason I was asking, right? Listening to this podcast this morning, and the person was talking about that people are addicted to tobacco and to nicotine and stuff like that. So it makes sense that those stocks don't necessarily drop because people are always going to be smoking. You know, when you see like people take like 5 smoke breaks at work, and they're all out there in the freezing cold, and they have their pack of cigarette and like, right, and then you know, has anyone ever asked you? Have you ever been just chilling and somebody says, "Hey, do you got to smoke?" I'm like, I'm sorry, I don't smoke, right? So I'm just saying, it's a thing. So my question is, just because you don't do it, should you not profit off of the the guilty pleasures of other people? That's what I was wondering. That is what I was wondering, you know? But I don't know. It's a good question. It's a good question. But thank you guys for answering. I really appreciate it. And let's say, Mitch says, can you come up with something of your own? Apparently I can't. Apparently I cannot. And why would I come up with something of my own if yours are just so amazing? All right. Isn't the saying that imitation is a form of flattery? I'm just saying, Mitch.
We the best.
You should appreciate it. All right, you should appreciate it. And your car says they are speeding in Altimas with the front bumpers missing. Mitch says, and the people that don't smoke get in trouble for going outside for 2 seconds while the smokers can do whatever the hell they want to do. That's a good point. That's a good point. I remember when I was working in the call center, like they got 3 10-minute breaks, right? And we got like 2 15-minute breaks. But I don't know, they would be out there. They would be out there and they would be like out there in the freezing cold. I don't know, it wasn't really cold down here. Actually, no, it wasn't freezing cold because it wasn't cold down here. But, you know, it gets a little chilly in December, like, you know, for 2 days in December. And they would be out there, you know, like all of them huddled around talking about whatever they're talking about. So I'm just saying. All right, let's see what else we got. It says, always stealing my stuff. It's sick. I just borrow without asking, Mitch. That's all. Just borrow without asking. That's it. It's about time you put them glasses on. I'm Bizak. Guess who's back? It says, can't stand that. The smokers are outside in the cold with, that's the thing. They're the boss. If they go down with the boss, they come back up with the boss. If the boss spends 20 minutes down there, like, I was just chilling with the boss. I'm telling you. It's rough. All right. It says, I can only imagine, Mitch in New Jersey, like when it's freezing up there, it's like, I'm going out for a smoke. Just saying. And Roxy says, they smoke in icy conditions, takes a lot of breaks. I'm saying. And it says, oh, okay. All right. Stop the show. We got my guy Rod Brown in the building, aka Mr. Tech Daddy himself. Says, no need to fear. Tech Daddy is here. Welcome. And tell you, Mitch is just he is on one today. He's like, I'm not entertaining this BS from whoever that is. All right, let's get to our next topic. We're going to be looking at the JOLTS report. So the Bureau of Labor Statistics will release the job openings and labor turnover survey for July, which measures job vacancies across industries. So there's a little switcheroo that happens with these job numbers, right? Imagine this, right? Imagine if the federal government hired 100% of the people, then the unemployment rate would be like about 0, right? So we'll take that into consideration, right? So let's go into this job report. I don't have it open yet. All right, let's go here. Oh, you gotta be kidding me. Let me see. Can I get it? All right, there we go. Cool. Let's go like that. Good enough. All right. So the job openings and labor turnover summary. The number of job openings was little changed at 7.7 million on the last business day of July. The U.S. Bureau of Labor Statistics reported today. Over the month, hires changed little at 5.5 million. Total separations increased to 5.4 million. So separation is when people quit or they get laid off or they get fired, whatever, right? So 5.5 million people hired, 5.4 million people gone. Within separations, quits. So 3.3 million people quit. Whoa, they got it like that. The layoffs and discharges are at 1.8 million. Change little. This release includes estimates of the number of rate from the number and rate of job openings, hires, and separations for the total non-farm sector by industry and establishment size. So, mention your car, whoever, right? Whoever knows. Why do they say like non-farm? Like what is the why do they say I guess why do they say non-farm, right? I guess that's what I'm wondering. Job openings. On the last business day of July, the number of job openings was little changed at 7.7 million and was down 1.1 million over the year. The job opening rate at 4.6% changed little in July. The number of job openings decreased in healthcare and social assistance by 187,000. State and local governments, excluding education, decreased at 101,000. And transportation, warehousing, utilities at 88,000. It went down 88,000. However, we do have a shining light, right? The job openings increase in professional and business services at 178,000, and in the federal government at 28,000. So, at least the federal government is able to use our tax dollars to give people jobs. So, congratulations to them. So hires in July, the number and rate of hires changed little at 5.5 million and 3.5% respectively. Hires increased in the accommodation and food services at 156,000, but decreased in federal government. So it's interesting because that they would be increased in accommodation and food services, because I guess it depends where. Because if I had a restaurant and I had to pay somebody $25 per hour to work there, I would be like, let's reconsider. I'd say, Mr. Elon Musk, do you have any robots that could be of service to me? I need to make some hires to handle my restaurant because this is just too expensive for me. All right. Imagine when Elon Musk makes the fry fryers. I guess that would make sense. The fry fryers and the burger flipping robots. And now we just have one person in charge who is making sure everything goes right. I'm just saying. So separations, total separations, including quits, layoffs, and discharges. Is discharge a nice word for fired? Is that what it is? A nice word for being fired? Let's go with, is this what they're trying to say? Is this what they are trying to say?
You're fired. You're fired. You're fired. You're fired. You're fired. You're fired. You're fired.
So let's continue. Quits are generally voluntary separations initiated by the employee. How did 3.3 million people quit? I don't know. Although one of my friends that I play basketball with, he said he just quit his job. He said he called the boss and said, you know what? I'm not coming back. I've had enough. I'm going home. All right. Quits are generally voluntary separations initiated by the employee. Therefore, the quits rate can serve as a measure of workers' willingness or ability to leave jobs. Layoffs and discharges are voluntary separations initiated by the employer. Other separations include separations due to retirement, death, disability, and transfers to other locations of the same firm. This one, I don't understand why this one is actually a separation. Does this get counted as a separation and a hire? I don't know. The number of total separations in July increased to 5.4 million plus 336,000. The total separation rate was little change at 3.4%. Total separation increased in healthcare and social assistance. This might be my favorite report. I like these numbers. I like looking at these numbers, right? In July, the number of quits was essentially unchanged at 3.3 million, but was down by 338,000 over the year. Over the month, quits rate changed little at 2.1%. Quits increased in information at 16,000. In July, the number of rates of layoffs and discharges changed little at 1.8 million and 1.1%, respectively. Layoffs and discharges increased in accommodation and food services, 75 plus 75,000. So 75,000 people were laid off or discharged in food and accommodation and food services. Probably a big chunk of them in Atlanta, New York, maybe Chicago, maybe Colorado. Who knows, right? Layoffs and discharges increased, and all right, so we got that. And in finance and insurance at 21,000. The number of other separations increased to 381,000, 71,000 plus 71,000 in July. And all right, so lastly, let's get to establishment size class. In July, for establishments with 1 to 9 employees, the quit rate decreased, while the layoff and discharge rate increased. Trust me, I mean, when you're a team of what, you know what? Sometimes every single day I wake up, I'm like, should I fire myself? Or I do a performance review on myself every single day. I am always on the hot seat on am I going to fire myself? Am I going to fire does my AI clone count as an employee? That's a good question, because I do pay for the AI clone, right? Should that count as, is it sentiment or sentient enough to be counted as an employee? That is a good question. I'm going to ask Roxy. Roxy, if you were me, would you count the AI clone as an employee? That's what I want to know. So what else we got? So we got that. The job openings rate, hires rate, and total separations rate changed little. For establishments with 5,000 or more employees, the job openings, hires, total separation, quits, and layoffs and discharge rates showed little to no change. And then lastly, for June of 2024 revisions, the number of job openings for June was revised down by 274,000 to 7.9 million. What? You see how they have this, you see how you have this little revision part all the way at the end? It says, oh, by the way, the number of jobs that were open, we're just going to revise it down by 275,000 to 7.9 million. The number of hires was revised down by 93,000 to 5.2 million. So a little bit of a disclaimer over here, right? Oh, by the way, the number of jobs that were open, it was a lot. It was actually 275,000 less, and the amount of people that were hired was almost 100,000 less than we thought. All right. The number of total separations was revised down by 11,000, which is good. Less people got fired, so that's good. While separations, the number of quits was revised down by 68,000, not bad either. The number of layoffs and discharge was revised up. Whoa! What the? So everything was revised down, but then the number of layoffs and discharge was revised up by 62,000 to 1.6 million. Oh my God. Monthly revisions results from additional reports received from businesses and government agencies since the last published estimates and from the recalculation of seasonal factors. Craziness, all total craziness. All right, let's go back to full screen. Let's check the chat before we get into our next topic. So, let me see. So it says Ralph knows that. Why didn't he say it? Knows what? What do I know? I don't know what I know. I don't know what I know. Let me see. It says you're going over the layoff sword. You're going over the layoffs sword in August. Am I? Let me look back. Let me see. Layoffs 1.8 million. Well, they said it was little change. So is that really soaring? If they said that the layoffs were similar to go back to it. You ain't gonna make me look crazy. So it was 1.6 in. So layoffs and discharges was 1.6. They revised it to 1.6 in June. September. Let me see. July. What was it? July. All right. So 1.6 in June. Separation quits were 3.3 and 1.8 million. They said it was little changed. What was it in July? In July, let me see. If we look at the Bloomberg says that the JOLTS, look at JOLTS. The forecast was 8 million. The previous was 7.9, but it was actually 7.67. Cool. I don't know. Did I miss something? What did I miss? What did I miss? Maybe I missed something. I don't know. You let me know, Mitch. You let me know. All right. Let's go to your card says gross versus net. And it says low income jobs never retain employees. That is true. So the turnaround should be high in the job market until the quality of jobs change. Will the quality of jobs ever change? That is a good question. Which is 80%, 80 something percent of the people that work make up those non-farm jobs. Yeah, I don't think there's a lot of farm jobs, but I could be wrong. Like warehouse cashiers and fast food. It says, yes, me and your car will fire you. We got this. How do I put in like? Is that a promise? I don't even see it as a threat. Is that a promise? Will you please? Can you make that happen? Can you make that happen?
Thank you for your patronage.
Let's see. I don't think that's directed at me. I don't think so. It says, ask Mitch. He says, both of you. What are you talking about? What are you talking about? Oh, you're talking about me and the clone. I got you. And it says, like he says, no, the AI clone is not an employee. He is a tool. Well, Roxy, how is it a he if it's not an employee? Wouldn't an employee have to be a he? I don't know. Or I guess not. You might be right. You might be right. It says, no, you count the AI clone as a dependent on your taxes. Now you're talking your card. Now you're talking. I'm gonna claim the clone. I'm gonna claim the clone. And says, you know what this is a setup for? This will be one of the top topics for the debate. The job numbers. We'll see. I don't know. I don't have high expectations for the debate. I really don't. It says, no, I said you are going to. I'm gonna do what? Stay with me now. Keep up. I'm trying. It says, did you always have those borders? Those borders. What borders? I don't know. I'm lost. Now I'm totally lost. It says just all right. Bye. Bye. It says you missed my chat about the farm labor is not included. Did I? Let me see. I don't see a chat about. Can you put the chat again? I don't see about the farm. Yeah, put that again. Oh, your car. It's not showing up for me. So I'll read it once you put it back. But I didn't see it. Let's see. I didn't see it. It's not on my thing. Put it back, and I'll read it. Let me see. But let's start looking into the next one. While your card gets me that chat, because I don't have it in the chat thing over here. Let's see. Maybe Mitch blocked it or something. I don't know. He would. So next up we have the Institute for Supply Management releasing the Purchasing Manager Index. I think that's which tracks non-manufacturing sectors. So that's like, I think the new name for that is Services Manufacturer Index. Just for the same reason I won't invest in tobacco. It's seasonal, and you want to talk about underreporting due to who they are hiring. Wink, wink. I'm trying to think here. But I guess, I mean, I'm trying to see the okay, what are you referring to in as being seasonal and about the underreporting? I blocked it. You notice when we on the same page. I'm using borders? Oh, those borders. Gotcha. Like you're talking about the border on the chat message. What did you say? What about those borders? I had updated those borders 2 shows ago, and then I lost it last show, and I got it back this show. But yeah, I just updated it that way a couple of like 2 shows ago. But going back to this, right? So the same reason you want to invest in tobacco, about it's seasonal, and you want to talk about the underreporting due to who they are hiring in. Give me some more context on that, Yakar. When you say, I know you said the tobacco seasonal, but what are you talking about with the what's seasonal and what's being underreported? That's what I'm trying. That's the part I'm missing context on. Let's see. I see the background placement. I see you. I'm just living my best life, Mitch. I'm just living my best life. All right. So let's go to the purchasing manager index, right? Let's go to that one real quick, and then we shall continue. Which is actually the services the services index, I believe now. So let's go to over here. Okay. Let's see. So can I zoom in on this a little bit? Oh, I could. Cool. Let's do that. So business activity index at 53.3%, new orders index at 53%, employee index at 50.2%, supplier deliveries index at 49.6. So let me take a look at this one for the non. See how? Let me see. Purchasing or services. What is the name of this one? Well, I don't have I thought I had the other one in there. Let me see if I can open this up. Pretty sure purchasing index. Have that one. I thought I had one for the producer price index. No, that's not the one. Purchasing manager index. PMI. Thought I had one for the services, but let me see if Bloomberg has that one. Bloomberg manufacturing, close the jolts out. We have services PMI. So let's take a quick overview. The services PMI is published monthly by Market Economics. The data is based on a survey of 400 executives in private sector services companies. The surveys cover transport and communication, financial intermediaries, business and personal services, computing and IT, hotel and restaurants. The index level of 50 denotes no change since the previous month, while a level above 50 signals an improvement, and below 50 indicates deterioration. A reading that is stronger than forecast is generally supportive, bullish of the US dollar, while a weaker than forecast reading is generally negative, bearish of the US dollar. So the non-manufacturing index of services PMI was 51.5%. So let's take a look at that now. So economic activity in the services sector expanded for the second consecutive month in August, says the nation's purchasing and supply executives in the latest services ISM report on business. The services PMI registered at 51.5%, indicating sector expansion in 6 of the 8 months in 2024. This month's reading indicates sector expansion for the 48th time in 51 months. The report was issued today by Steve Miller, CPSM CSCP chair. I'm chair of the Institute of Supply Management Services Business Survey Committee. In August, the services PMI registered at 51.5%, 0.1% points higher than July of 51.4%. The reading in August marked the sixth time the composite index has been in expansion territory in 2024. The business activity index registered at 53.3% in August, which is 1.2% points lower than the 54.5% recorded in July, and indicated continuing expansion after 1 month of contraction in June. The new order index expansion expanded to 53% in August, 0.6% points higher than July's figure of 52.4%. The employment index expanded for the third time in 2024. The reading of 50.2% is a 0.9 percentage point decrease compared to the 51.1% recorded in July. So, and this is for the services industry, not for like the manufacturing industry, all right? Let me see. Anything else in here? I like to go down to the 10 industries reported growth in August. The services PMI has expanded in 18 of the last 20 months, dating back to January 2023, and August reading is equal to 51.5% index average of 2024. Right. Let's go down to industry performance. The 10 service industries reporting growth in August listed in order are arts, entertainment and recreation, mining, transportation and warehousing, other services, information, healthcare and social assistance, finance and insurance, public administration, educational services, and utilities. Let's see. The 7 industries that reported a decrease in the month of August were agriculture, forestry, fishing and hunting, retail, trade, construction, wholesale trade, accommodations and food services, management and of company and support services, and professional, scientific, and technical services. So, what are the respondents saying? Generally, business is good. However, there are concerns of a slowing foot traffic in restaurants and other venues where our products are sold. That's from the agriculture, forestry, fishing, and hunting. Housing market continues to be dampened by higher borrowing costs. All segments of the industry are affected. Single-family homes for sale, business build for rent, and multifamily units are all feeling that effect. That's in the construction area. Activities increasing in the finance and insurance sector. Business continues strong from healthcare and social assistance. Overall, business is improving from information. Hiring of employees, contractors, and consultants continue to decline as companies look to control costs during a period of economic and political uncertainty. Employee layoffs continue across the broad range of companies and industries. Management of companies and support services. Business has slowed, and it's harder than ever to find talent but less jobs available as well. Professional, scientific, and technical services up in business and activity. Steady interest rates are impacting investment and non-regulated business silos. And then lastly, high food costs are impacting customer demand, and weak sales performance has resulted in negative growth overall. Business activity is stable and supplier costs are generally flat. So that is our services manager index report. Cool stuff, right? So let's go back. And let me see what the chat is saying, and then we're going to get to our next topic. What is our next topic is going to be the job reports. We're going to talk about the unemployment rate coming up next, all right? And I have some videos about that as well. So let's get to the chat, see what we got going on. And if you haven't done so already, do me a big favor. Like the video, share the video, subscribe to the channel, hit the notification bell so you know every time that we go live and drop new content. Check out techcoachralph.dev, get access to exclusive content as well as one-on-one coaching with me. You can sign up for free and you can go from there, right? So that's techcoachralph.dev. So let me see what we are looking at over here. Your car was giving me some clarification to what it was referring to. The laborers are usually illegal and migrant workers. The time to pick crops are seasonal. Okay, gotcha. And crops yield differently every year, so it's not like a manufactured product where you can predict. Okay. Oh, okay. Now I got you. Yeah, I didn't see that earlier, but that makes a lot of sense. So the reason that they separate the non-farm payroll to the other jobs, right, is because of the type of workers that they have, as well as crops are seasonal. They don't grow year round. So it's going to be hard to manage the tracking of the jobs. It's going to throw it off. All right. So, okay, shout out to your car. Appreciate your car.
I appreciate you. We the best.
Thank you, Yakar. That makes total sense. That totally got it now. I'm gonna add that to our Urban Dictionary of explanations. And let's see. So, Mitch says, but you can give a guesstimate like they always do, or you can just separate the two reports and not have it counted as well. That's also a possibility, right? It says they have to leave room to cook the books. Let me cook. Says they be cooking. They cook at 818,000 degrees. That's a fact. Let me see. All right. So, let's get into this. Let's get into our job reports, right? Let's get into our job reports. So, let's take a look at Bloomberg first. And Bloomberg says that the unemployment rate, so non-farm payroll, it was expected to be at 164,000 of new hires, and it was at 142,000. So we missed the mark by 22,000. And also the unemployment rate, it was 4.3 last year. It was forecasted to be at 4.2. Or not last year, last month it was at 4.3. It was forecast to be at 4.2, and it is currently at 4.2. All right. So let's take a look at this information real quick. So we're going to go to here. Take a look at this. Oh, they've been sharing screen. All right. So let's take a look at this real quick. So, has anyone ever called these numbers? I should call this on Monday morning, just to see who answers and what they say. All right. Anyways, the total non-farm payroll employment increased by 142,000 in August, and the unemployment rate changed little at 4.2%. The U.S. Bureau of Labor Statistics reported today job gains occurred in construction and healthcare. Let me see. Roxy, did you get some new coworkers? Roxy? Because it said that increase in construction and healthcare. So you might have got some new nurses or some new patient care technicians, things like that. Some phlebotomists or radiologists, did you get some new coworkers? Says this news. So this is August 2022, we were at like a little above 3.5, and then we went down a little bit. Now we've just been steadily rising all the way to 4.2. I wonder what it's going to be next month, right? So this news release presents statistics from 2 monthly surveys. The household survey measures labor force status, including employment by demographics characteristics. The establishment survey measures non-farm employment hours and earnings by industry. For more information about the concepts and statistical methodology used in these, see the technical note, all right? So household survey data, both unemployment rate at 4.2% and the number of unemployed people at 7.1% changed little in August. These measures are higher than a year earlier when the jobless rate was 3.8% and the number of unemployed people was 6.3%. Among the major worker group, the unemployment rates for adult men, 4%, adult women, 3.7%. So more adult women have jobs than adult men in percentage wise. Teenagers' unemployment rate was 4.1%. So teens don't have jobs. Whites were 3.8%. Blacks were 6.1%. Asians at 4.1%. And Hispanics at 5.5% showed little or no change in August. What in the world? What in the world? All right. So among the unemployed, the number of people on temporary layoff declined by 190,000 to 872,000 in August, mostly offsetting an increase in the prior month. But the number of permanent job losers was essentially unchanged at 1.7 million in August. The number of long-term unemployed, those jobless for 27 weeks or more, was virtually unchanged at 1.5 million in August. How can you be unemployed for 27 weeks? That is a long time. The long-term unemployed accounted for 21.3% of all unemployed people. The labor force participation rate remained at 62.7% in August and is a little change over the year. The employment population ratio was also unchanged at 60%, but is down by 0.4% over the year. Let me see. Anything else? Let's see what stands out. The number of people employed part-time for economic reasons was little change at 4.8 million. Let me see. Establishment survey data. Total non-farm payrolls increased by 142,000 over the month. Employment growth in August was in line with the average job growth in recent months, but was below the monthly average gains of 202,000 over the prior 12 months. Let's see. So construction rose by 34,000. Healthcare added 31,000 jobs. In August, the employment and social assistance continued the upward trend of 13,000. Employment in manufacturing went down by 24,000. And then these showed little change. In August, average hourly earnings for all employees on private non-farm payrolls increased by 14% or by 14 cents or 0.4% to 35.21. Over the last 12 months, average hourly earnings have increased by 3.8%. In August, average hourly earnings of private sector production and non-supervisory employees increased by 11 cents. Let me see. The average work week for all employees on private non-farm payroll edged up by 0.1% to 34.3 hours in August. I guess I'm working too much. In manufacturing, the average work week changed little at 4%, and overtime edged up by 0.1 hour to 3 hours. Interesting. The average work week for production and non-supervised employees on private non-farm payroll remained at 33.7 hours. What happened to 40 hours? I don't know. What's going on with the 40 hours? Let me see. Anything else? I think that might be it. Yep, that is about it. What do you guys think about these job numbers? But I do have one more. I wanted to play this thought by Charles Payne over on Fox Business to see what the thoughts are. All right, so let's go to.
So all the apologists are out there using this term normalization, which is to minimize an economy that's slowing dramatically. But there's another thing, a way of saying it on Wall Street, at least they used to talk about reversion to the mean. Now, if this were a quote unquote normal jobs market, folks, and it would be moving along that trend line you see there, the pre-pandemic trend line, that means we'd have 7 million more jobs. Joining me now, Heritage economist Peter St. Onge. And Peter, the financial media has talked about climbing above pre-pandemic levels, but everyone knows that that's not an honest gauge of economic success. And we are so far behind, and it doesn't look like we're going to catch up to those trends.
Yeah, it's incredible. We just got a jobs number today. What they turned in 142. I mean, this is not the kind of job report you need to try to make up some of that lost ground. 7 million compared to trend is a stunning number of jobs that we've lost. And, when you dig in and look at job composition, for example, over the past year, we have literally lost full-time jobs. They've been replaced by part-time jobs. So this economy, on paper, it may look spectacular. There is a lot underneath the hood.
Now, we know, of course, the Fed's going to spring into action any moment now. But what can the Fed do with respect to staving off government spending, running amok? I mean, there's just so many things out of Jay Powell's hands.
Yeah, there really is. And, the timing at this point, if they're hoping to affect the economy in the next 6 months, say, they are way late to the game. They've pretty much made their bet at this point. The time for the Fed to stop in and cut this off would have been, 2021, when we had this just tsunami of government spending. Of course, that's what fed the inflation. That then knocked the Fed on this pendulum where they keep swinging too far in one direction or the other. We had the most extreme rate hike since the 1970s. So at this point, the Fed is very reactive. They're trying to sort of balance things between the inflation and what looks like a looming recession. Now, the trick here for the Fed is that historically recessions drop inflation by a lot. Mm-hmm. So in the past 4 recessions, going back 35 years, inflation has dropped 3.5 points on average because of the recession. So you have unsold goods, you have excess capacity. So at this point, the Fed can't be sure, is it really mission accomplished on inflation, or is it mission accomplished on the recession? And that's hiding the actual inflation numbers. They do not know. I mean, Jerome Powell told us he's navigating by starless nights. They really don't know what's happening here. And so
that makes me ask the question though, right? Let's say the Feds cut points or rates or whatever they call it, right? But then now they just now the government's like, well, now that the interest is lower, let's just go out there and spend more money. Let's go out there and give people $25,000 to buy a house. Let's forgive more student loans and all this type of stuff. So now we just start creating more money, and now the value of the dollar keeps going down. It's like we're just shooting ourselves in the foot. Because if we don't have a budget and we just oh, well, there's more money, so let's spend more, that doesn't make any sense to me. That doesn't make any sense to me whatsoever. But I digress. Let's finish off this video. Let me know what you think. Let me know what you think. Do you think that if we don't get our spending in control, does it make any difference what the Feds end up doing?
Several of your guests have mentioned the policy errors. It looks like the Fed is repeating the mother of all policy errors, the 1970s.
Wow. Hey, before we go, I've got to ask you, right, because the election looms large. I think there's a stark contrast economically. No matter how many ideas are adopted for public consumption, I think we would particularly move into a socialist-like era with Vice President Harris. So your weekly note is titled, "Why Weak Men Vote for Communism." So the question, of course, is why do they?
Yeah, this is pretty shocking. There have been a series of studies that have found that low testosterone men who don't go to the gym vote left wing. And there's a fascinating theory. It's by a professor at Emory called Darwinian Politics. Check it out. You can find it on Amazon. But long and short of it is that people who vote left are obsessed with internal competition. People who vote right are interested in making society strong and healthy. It's a fascinating read. I hope people will check it out and think about their own political biases if they're there.
All right, I can't wait till you do the one of soy milk associated with soy milk.
Had no idea that was coming at the end, but it is what it is. It is what it is. All right. So, but wasn't expecting that. Let's see. All right. Let's see. So, what are your thoughts about what I was saying about whatever the Feds do, if the government doesn't get their spending in order, it's just gonna be you know what? Let's check this out real quick. Debt clock. Let's just see this real quick. What are we at? We are at 35 trillion, 353 billion, 618 million, 100. It's going up quickly. It's going up quickly, right? So if we don't get our spending in order, it doesn't even matter, right? So, okay, let me know your thoughts. Let me know your thoughts. Let me see what the chat is saying real quick. So, let's see. It says this isn't true. It was worse. We just wait till February. They're like, oh, well, we actually have to say it was a lot less jobs created than we thought, right? Some healthcare are hiring more customers. Really? Healthcare is. How does that happen? Mitch, give me some insight on that. How does that happen? How is healthcare hiring customer success people? Is it how do customer success work in healthcare? That's interesting. That is interesting. And Roxy says, no new staff. Gosh.
Bruh.
It says, Roxy, you're a nurse? Yes, Mitch, yes. Do you, Mitch, do you not follow along? Everyone, we've known that Roxy's been is a nurse for the past month now. Come on. It says, is it still one nurse to 6 to 8 patients? Sometimes it is 1 to 12. That's true. Like when my wife was working in the hospital, sometimes it'd be like 1 to 15. And sometimes you can't even find the nurse. The nurses just be hiding out in some room. So it's crazy. It says, I didn't want to say that. I thought it had changed a little. Nope, it has not changed. It has not changed. Sounds like Ralph, internal competition. It says, keeps my pay high though. So look at that. Stress high and risk of layoff low. That's a good point. That is a good point. Nurses don't really get laid off like that from what I've seen. Nurses don't really, because people are always going to be sick. So it's a consistent field. It is a consistent field. And I'll tell you, these nurses, they be working like 3-4 jobs. Roxy, did you ever work multiple nursing jobs at different hospitals? Because I've known nurses that they'll have like, because it's like they'll have like the 3 days shifts. So they'll work 3 days at one hospital and another 3 days at another hospital, or they'll take on additional overtime, additional days. Have you ever done that? Have you ever done that? Just curious. It says, agreed. I know it's bad for the body though, and the mental daily grind. I give you a lot of credit. I know it's not easy. Look at Mitch being nice. You see, look at that. Mitch is being all nice and stuff. Aw.
Let's get it.
Very nice. Very kind of you, Mitch. Let's clap it up for Mitch. Clap it up for Mitch. He is capable of being nice. He is capable of being nice. It says, the president has to check the feds. It's supposed to be a symbiotic relationship, not a predator and prey relationship. Thank you, Yakari. That makes they should check the feds. This customer success project managers. I mean, the outsourcing they are doing for their tech softwares. Oh, okay. I see what you're saying. I see. But customer success. Project managers. I don't know. It's kind of, I don't know. I don't understand it. It says, whoa, what in the world? Where'd that come from? Where did that come from? Thank you. See, we're trying to give Mitch some credit, and now he's just telling me to shut up. I tell you, because I know nurse managers that work agencies at other hospitals. That makes sense. They'll be having like 10 jobs. I tell you. Stop fooling the people. You're mean. Oh, Shannon Sharp, and I'm Ocho. I am mean. I've never denied me being mean. It says you're not in the field. You don't know. That's why I'm asking. I was just asking a question to stay in your lane. I was just trying to get some more information. I was just trying to get some clarification. Is that your field, Mitch? Is that your field? I thought you were Are you a data analyst for a hospital? Are you a data analyst for a hospital, Mitch? Is this your field? But I digress. Okay, so what do we have next up on the list? Let's see. We're going to look at the safest cities to live in. Your car sent me this. He wanted to go over this, so we're going to go over that. Let me put that up. And do me a favor, if you haven't already, like the video, share the video, subscribe to the channel, hit the notification bell so you can know every time we go live and drop new content. So let's go and Rocky says, I work a lot of OT. So you working now like one hospital, but you working a lot of overtime. The overtime is like what, double time? Is it holidays double time and overtime is a time and a half? Is that how they do it? But yeah, nurses, like, they'll work a lot of either overtime, do like work at multiple locations, or do both, so I don't think like any nurse who's just starting off, they're not going to be working like multiple locations or working that overtime. And then as they get like longer into it, they might start to slow down. So I hear you. All right, so let's get into this. So this is what your car sent me about 2024's safest cities in the US. What are the safest cities to live in? I'm going to say that if you're a betting man, would you bet that Chicago is at the top of the list of the safest cities to live in 2024? Yeah. So, despite progress overall, crime still impacts America's communities. Crime and safety are intertwined with prosperity, income, and economic opportunity. Crime is costly to individual victims, perpetrators, communities, and society at large. Money Geek's annual analysis looks at the most recent crime statistics from the Federal Bureau of Investigation, the FBI, to estimate the cost of crime in 302 cities with populations greater than 100,000 across the United States. The analysis pairs reported crime statistics with academic research on the societal cost of different types of crimes to estimate the cost of crimes for each city. Using these same methods, MoneyGeek also found the safest small cities in the US in a separate analysis, right? So, that is in good competition, right? Rod Brown, NYC, the safest city in America. Um, it's not even safe for the police officers. Even the police officers don't want to be there. The cost of crime per capita in the U.S. cities was $2,221 in 2022. Violent crime costs over $2,000 per capita, while property crime costs an average $198. For context, violent crime accounted for 19% of all crimes analyzed in the study, while property crime accounted for 82%. Thousand Oaks, California, ranks as the safest city in the United States, 241 per capita. Birmingham, Alabama, ranks the most dangerous with the highest per capita crime, $11,392. What in the world? Thousand Oaks. Where's Thousand Oaks, California? Let me see. Look at the map. Thousand Oaks, California. San Rosa Valley. I don't see anywhere any name. Malibu, Santa Monica. I don't see any names that I'm familiar with being close to Thousand Oaks. Malibu, Santa Monica, Topanga from Boy Meets World Park. There's a lot of state parks in California. Six Flags. Interesting. Above and to the left of Hollywood. Yeah, I see Thousand Oaks is right there. Hollywood sign is right here. There goes Thousand Oaks. I never heard of it though. Thousand Oaks is the second largest city in Ventura County. I've heard of Ventura County, from the Harry Bosch books. All right, so let's keep reading. In larger cities, those with population of greater than 300,000, the average cost per crime is $3,325, 74% more than the average for medium-sized cities, $1,906, right? So safest cities in the US. Hover over each city to see the overall rank and cost of crime per capita. So let's start off with over here, Roseville, California. The rank is 18, and the crime cost per capita is $502. Elk Grove, California, is ranked 13, and the cost per capita is $427. Can I zoom in on this? I can zoom in. Let me see. So Thousand Oaks is ranked number 1, $241. Simi Valley is ranked number 9, $404. Irvine, I've heard of Irvine, ranked number 6, cost is $364. Temecula, California, ranked 15, $461. And then Centennial, Colorado is ranked 25. Cost per crime is $569. Oh, you came in last. Poor you. McKinney, Texas is ranked number 14, $437 cost per capita, crime cost per capita. And Plano, Texas ranked number 12 with $420 cost per capita. Pearland, Texas ranked number 4, so Pearland is pretty good. Crime cost per capita $328. And what was the other one? There's another one over there. League cities ranked number 17, 490. Naperville, Illinois, ranked number 8. Cost per capita is 402. Let's see where Naperville is. Naperville, Illinois. Naperville, Illinois is, zoom out. Chicago's over here. Naperville is over here. Aurora is over here. Where is, let me see. Interesting. Okay, so Naperville over here. All right. Let me see. And then we have Fisher, Indiana, ranked number 296 crime per cost per capita. Let me see. Carmel, Indiana, ranked number 10, 405 cost per capita. Let's keep going. What is this over here? Amherst Town, New York, ranked number 20, 524 cost per capita. Crime cost per capita. Stamford, not to be confused with Stanford, but Stamford, Connecticut is ranked number 19, $514 per capita. What is this little one over here? It's hard to get these over here. Let me see. Yonkers, New York made the list. Shout out to Yonkers. Ranked number 24 at 556 cost per capita from Yonkers. I am not, though. I'm not. Woodbridge Township in New Jersey is ranked number 16 at 478 crime cost per capita. And then we go down to Florida, where Port St. Lucie is ranked number 22nd. Number 22nd? I thought Port St. Lucie would be better, but maybe they have a small population that makes the number rise up. But crime cost per capita is 536. Coral Springs. Shout out to Coral Springs, my neighbor. We are ranked number 7 on. We started at the bottom. Now we here. We made the cut. Alexis, we made the cut, right? Number 7. Crime cost per capita 375. Shout out. And then Pembroke Pines. Pembroke Pines. This is my backyard. Pembroke Pines is number 3 of the safest cities to live in. Shout out to Florida. So this one was number 22, this one was number 7, and this was number 3. Pembroke Pines, crime cost per capita 322. Look at that. We are on the map. Shout out to Florida. Not only do we throw alligators through Wendy's drive-thrus, but the cost of that crime is not too expensive per capita. I'm just saying. Right? See, anything else in this article? So, safest cities in the U.S. So, we just went through it all. It's all over here. Look at Pembroke Pines right here, Coral Springs right here, and guess what? Nobody else matters. So, Money Geek ranked 302 cities with a population of over 100,000 for the most to least safest. The following summaries are, let me see. Our largest city safe. So here, I wish I could see what the most dangerous cities are. Anyhow, hopefully we did this. City safety in the U.S. and cost of crime. The direct economic costs to crime to individuals and society include victim, medical, and mental health care needs, damage to and loss of property, and police and correction costs. This is very, very true. This is very, very true right here, right? Let's see. Aside from the imminent danger of crime, people living in higher crime areas see depressed home values and pay higher prices for crucial needs, including home insurance, renters insurance, and auto insurance. Clean up your own backyard. To assess the safest cities, Money Geek analyzed crime data. We read that. Including violent crimes such as murder and unauthorized access to, and aggravated assault and property crimes such as home burglary and motor vehicle theft. Winnicke calculated each city's cost of crime and ranked the cities based on the cost of crime per capita. Additionally, researchers have quantified how much more violent crime costs a community than property crimes. So this is a great article. Thank you. So you guys clap it up for your car for sending me this amazing article. What a great article. Keep them coming in your car. Keep them coming. Anything you want to talk about, please send them over.
I appreciate you.
All right. So that is that. But this is very, very true. I totally like, there's so many different things that go into account when you're calculating like the crime costs and stuff like that. So, or, and how much does it cost to live, because the hood, does it cost more to live in the hood than to live in an affluent area? That's the question. You know what? Let me start a poll real quick. I know we don't have that much time left, but I'm going to start a poll real quick. I'm going to start a poll real quick. If I can find the... Let me start a poll real quick. All right. Poll has been started. Let me know. I'm just curious. Does it cost more to live in the hood than it costs to live in the rich neighborhoods, right? The rich neighborhoods. So compared to, Alexa's going to understand this example, living in North Lauderdale or like a Sunkist down here in Fort Lauderdale, or living in Parkland or in Coral Springs. Just not in this one little block of Coral Springs. You don't want to go there, but everywhere else around Coral Springs is pretty nice, right? So that's that. So let's go back to full screen. Let me know. Take the poll. Curious to see your thoughts on that. Let's see. Let me see what the chat is saying in the meantime. Let's see. We said magnificent mile. Mr. Tech Daddy himself, Rod Brown, says New York City is the safest city in America. I hate going to New York. I hate going to New York. Not happening. Says, trust me, New York City is so safe. By the way, I also missed something. I also missed Mitch's nurses are rich, and says, I am not explaining myself anymore. 35 feet and I'm out. Ron says, nurses are rich. That's why I married one. Your car is taking applications to join the Tech Pookies, Rod Brown. He is taking applications to join the Tech Pookies if you want to be a card-carrying member of the Tech Pookies. I'm just saying. I'm just sharing. Huh? It says, Rod Brown says, yeah, maybe in the Hamptons / the Black Hamptons. Okay. We got that. Malibu's, that was a hilarious movie. Don't be hating. Says, we got that. Says, we got, all right. Mr. Darcel Chapman, how are you doing today on this fine, beautiful, beautiful Saturday morning? I hope you are doing well.
I appreciate you.
And I hope your entire family is doing well. I hope your daughter, I hope you guys are feeling much better after this crazy things that happened this week. Hopefully you're doing a lot better. Mitch, all right, so we got that. It says, Yonkers, bruh, this list is rigged. I don't know much about New York. I was just born there. I escaped while I had a chance. I got saved from New York. It says, Woodbridge is a false. It's a nice area though. I don't even know anything about Woodbridge. Let's see what else we got. And Alexa says, love it. Coral Springs on the map. That's what I'm talking about. It says Camden, New Jersey is dangerous, just like Michael Jackson's song Dangerous. This list is rigged. Chicago should be number 1. It should be. That is the absolute safest city to live in the entire, not even though in the US, in the entire world. In the entire world. And then people from Chicago will say, it's not true. It's only this one little block that this only this one little section. I'm like, well, you know what? People expand. People expand. They grow, because people that used to live in the hood down here, I be looking, I'm like, whoa, what is this person doing in my neighborhood? What is this person doing in my neighborhood? I don't know. Like, what's going on here? Is it time for us to move? Is it time for us to move? I'm just saying. Let's see. It says this is rigged. It says it's only great because Florida is ranked high. This guy, hey, I'm just saying. I'm just saying. Hey. See, our crimes of throwing alligators through, or baby alligators through drive-throughs is not that expensive. You know, so we pick our crimes wisely down here, right? It says it costs more to live in the hood. I don't need a poll. I got you, Mitch. I got you. It says the hood, it'll cost you your life. That is a good point. That is a great point.
Ain't believing us.
I like it. It says exactly. Credit bad, interest so high, usually poor schooling, etc., etc., etc. I could go on and on and on. You got, like, the interest is like, don't forget those payday advances, you know, like, because when people every other week they're going over there to they go on Friday to pay off the payday loan, and then they're back on Saturday to get another payday loan, right? With a high interest rate, and not to mention because they do not take care of their community. Now you have these little small corner stores where for a bag of Doritos that you can get at, you know, Aldi or Trader Joe's or Publix or wherever, right? For $1, you're paying like $2.50 for it. Not to mention the hot Cheetos. Question for Alexis and Roxy. Did you guys like hot Cheetos growing up? Did you like hot Cheetos growing up? That's my question to you. Did you like hot Cheetos? Or did you like the hot fries? Hot Cheetos or hot fries? Which one did you like better? That might be the poll for Sunday. Hot Cheetos or hot fries? Which was your preference? That's gonna be the poll for Sunday. I have to remember to make that the poll, right? Let me see. Wow. What did I say? Did I say something? I forget what I say, right? I have to go watch it back. It says every Tuesday, Thursday, or Sunday, whatever day, you should do a question. That's what I'm trying to do. I'm trying to think about a question. If you guys have ideas for questions, let me know. But that's gonna be for Sunday. You guys can start thinking about it now. Hot Cheetos or hot fries? It says leave the hood because your people coming. They just says never had them. My dad was always a vegetarian and raised. Are you a vegetarian, Alexis? Wait, wouldn't hot Cheetos or hot fries be vegetarian? I think hot Cheetos and hot fries would be considered vegetarian. I'm just saying they might be considered vegetarian, you know? Because the same way rice is considered vegetarian. Raise a strict fair. See that the additional context, that makes sense. Great job to your dad. Great job to you. You know, he is also good. We salute good fathers over here. And it says Oreos are vegan, but they're also junk food. All right. So that's awesome. That is awesome. And that's why we have raw juice and herbs. Oops, I meant there we go. All right. 25. Let me see. Anything else? Let me see. I think we might roll over the other two videos that we had. Yeah, we'll roll over so next week we'll get into, actually we might have 3 videos for next week, because I do want to, there was this one video about why the US won't pay down its debt. Should we tax unrealized capital gains? What are capital gains in general? And let's see. That should be. I think that's it, right? So we'll save that. See, time to go. Cool. So that's it. We are pretty much. It says they are not vegan. They have milk. Oreos have milk. You know what? Before we go, let me look that up. Are Oreos vegan? Oreos are technically vegan because they don't contain dairy or other animal-derived ingredients. However, some vegans may not consider them vegan for some reasons. Cross-contamination. Oreos are made in factories that use animal products, so there's a chance of cross-contamination with milk. Animal welfare. Some vegans consider ingredients that may harm animals during production to be non-vegan. Ingredients that aren't clearly labeled. Some ingredients in Oreos aren't clearly labeled as vegan. Japanese Oreos. Oreos fillings in Japan are made with milk powder, so they aren't vegan. Oreos became suitable for vegans in 1997 when lard was removed from the recipe and plant-based oils were used. What? This right here is this. This is deadly right here. Plant-based oil. So that's like canola oil. I will not step foot of canola oil within a 100-mile radius. Just saying. Let's see. Let's see. What else do we have? So as we wrap it up, so I can see why some can consider them not to be vegan, but I've always heard that Oreos were vegan. Let's go back to full screen as we wrap it up. Let's see. Mitch says not true, and Roxy says staying away from Cheetos. Are you staying away from them now, and you used to like them, or have you always? Because when you say staying away, that means that you used to be very, very best friends, or not even best friends. Maybe you could have been like acquaintances with Cheetos, and now you're like, you know what? It's been a nice run. We can't do this anymore. It's not you, it's me, right? It's not you, it's me. I have to step away. Is that what's going on, Roxy? Let me know. And it says point for Mitch. What's the cream in the middle? You want to find out? Let's find out. If this is gonna get you to eat Oreos, Alexis, don't do it. What is the cream in Oreos made of? Oh my God, I just threw up in my mouth. It's made of sugar, soybean oil, coconut oil, mono and diglycerides, soy lectins, artificial flavor, salt, titanium dioxide for food color. Oreos are a type of sandwich cookie made up of 2 cocoa biscuits with a sweet fondant filling. So that is the point for Mitch. Mitch, you got this one. Mitch. You got this one. But the sugar, the soybean oil, and the coconut oil is not too bad. Coconut oil is not bad. Soy lectin. I don't want soy. You saw what the guy on the Fox Business thing said, right? I don't want any of that artificial flavor. So the only thing I see good in the whole list right here is the salt and the coconut oil. I'm just saying. But Mitch, hold that W. There. Good job, Mitch. Schooling us youngins over here. Says regular Oreos are not the other one. And Alexa's like, I agree. Peanut chews to the original ones. 2 points for Mitch. 2 points for Mitch. And it says, y'all think all I do is play around? No, Mitch, we know you be winning.
We the best.
And it's worse than I thought. I would rather them put milk in it. Please, just put milk in it. Anyways, let me check our poll results, and then we are going to wrap it up. So let me end the poll. We had 7 votes where, let me see, where is it? It says 7 votes. 71% of the people said that it costs more. It costs more to live in the hood than it costs to live in the affluent, rich neighborhoods. And we had 28% that said that no, it costs more to live in the affluent neighborhood than it costs to live in the hood. All right. So it says have them points. Have them points. It says, I want to be the reason why people say no. I want to see. I want to know the reason why people say no. I don't know. I don't know who voted no. So who knows? Who knows? Let's see. And let me see. All right, cool. So I think that's it for today. I think that is it for today. Let's go back to full screen. And thank you guys so much for tuning in. I really, really appreciate you. Hopefully you guys had a good time. Hopefully, you know how we do. You know how we're gonna end, right? Question for you.
Are you not entertained? Are you not entertained? Is this not why you are here?
I had an amazing, amazing time hanging out with you guys. But you guys know, with inflation, with the minimum wage, all of that good stuff, with the taxes on unrealized capital gains and on capital gains, yesterday's price is not today's price, and today's price is not tomorrow's price, because
one more thing. Price of the brick going up.
The price of the brick is always and forever going up. And on that note, this is Tech Coach Ralph with another Men Lie, Women Lie, Numbers Manipulate show. We are out.
You might think that getting into the IT field is impossible without a computer science degree, but Tech Coach Ralph is here to prove you wrong. Get ready for some jaw-dropping revelations on how to break into this lucrative industry. Listen up, tech enthusiasts. Are you ready to break through into the IT field, but feel like you need a computer science degree to make it happen? Think again. Tech Coach Ralph has some exclusive, mind-blowing secrets to share with you. Get ready to be blown away by his jaw-dropping revelations on how to break into the tech industry without a computer science degree. So get your notepad ready, because Tech Coach Ralph is going to change your life forever. Buckle up, because you're about to embark on a journey to success in the IT field.